What's good, YouTube? It's your boy CookieFX here, and today I'm bringing you guys my first ever YouTube video. This is pretty much like a trading plan video. I honestly I created this channel just to simply help people trade because I'm currently in the process of building up my trading account and like compounding. I'm currently in the process, and I've been getting like a lot of requests lately to show my trading plan. So here we go. It's literally a one-page Word document. Now your trading plan, it doesn't have to be this like 10-page paper. It doesn't have to be any of that. It could literally be a one-page paper. Just keep it simple, and as long as you understand it, and as long as you're disciplined enough to actually stick to it, your trading plan is going to be amazing, right? So first things first, I have what kind of trader. I tend to ask myself a couple of questions. What kind of trader am I? What sessions do I trade? What pairs or indices or commodities, whatever, what do I trade, my risk management and risk to reward. And I also kind of gave myself like a little bit of reminders here, like catch yourself doing the bad habits. um, and then here, like, I wrote down like a couple goals that I have as a trader, just because, again, I'm disciplined enough to follow and stick to this trading plan to the T. Now I wrote this about 8 months ago when I was in my at my beginning stages, because I always heard like you have to stick to your trading plan, you have to stick to your trading plan. um you can't you can't like disobey the trading plan. Okay, so anyways, let's get into it. So here I have, what kind of trader are you? I'm a scalper and an intraday trader. Now it kind of took me a little bit to kind of really realize what kind of trader am I, just because I kind of told myself, I'm like, look, I don't really have the patience to swing positions. Like the most I could hold my positions for is a day, a couple hours, couple minutes, 15, 20, 30 minutes. Like I noticed that I like to just be in and out of the market. I don't really like to sit down and try to swing positions. Like I don't know, for me, like I just don't have the patience enough to sit down and actually hold the position for days, weeks, a month, 2 months, and especially me because um back then when I didn't really understand like liquidity or like smart money concepts, I kept getting stopped out. So I'm like, if I'm getting stopped out scalping or like being an intraday trader, there's no possible way that I'm gonna have the patience enough to swing a position. So that's what it is for me. Like I'm a scalper and an intraday trader. So then I asked myself, what kind of sessions do I trade? So obviously I wanted sessions with a lot of volatility. So I trade the New York session and London session. To be more specific, literally 95% of my trades are from New York session. I like to trade that New York session London. I like to trade that New York London session crossover. Just because I noticed that you can trade like pound pairs with USD. You could trade gold throughout the day. You like I like the volatility. Like I know like Asian session, it doesn't move like that. So it's like I'm not really gonna trade that obviously. But yeah, so like literally like 95, 98% of my trades are from New York session. So I ask myself, what do I trade? Like what specifically do I sit down and trade? So I trade NAS 100, which is an indice. On my course, I actually, which is it's coming out very, very soon. I actually teach you guys how to trade institutionally. The course, it really isn't like set up for like beginners. Like I don't teach about like support resistance, market structure, because that's what my YouTube channel is for. Like that's what I want to teach on YouTube. Now, as far as like the ins and outs of how I trade like gold, indices, just how I trade in general, I want to use that and put it on my course. So like I said, my course is coming out very, very soon, like very, very soon. Also my website, because I also want to do one-on-one Zoom sessions. Um, so that's that. So I trade NAS 100. I want to try to throw in US 30, but I've heard a lot of things about US 30. Like it's not. I don't know. Like I just heard a lot of people like they've blown their accounts and stuff like that. So I don't. I want to try to add it, but I'll see what happens. Then I trade gold, I trade Euro USD, I trade GBP USD, and I trade GJ. Now, like I said, literally all the pairs that I trade, you can trade them during that New York London session crossover. That's why I really like it. At one point, like during my beginning stages, I was literally just strictly trading gold. One of the things I really love about gold is that you could trade it at any session during the day. Now, obviously, again, since it's against the USD pair, you're gonna trade it during that New York London session crossover. And also during the time of the day which you trade these pairs that I just mentioned, it also matters too. So then I wrote down my risk management and risk to reward. I only risk 1% or less per setup, not per entry. I had to write that down. I have to be very specific because some people think that you could risk 1%, and be like when people think that you're risking 1%, they think that you mean per entry. No, it means that you're risking the entire setup. So for example, um say if I have a $10,000 account, and obviously 1%, the most I can risk is $100. So when you play standards, that's obviously 10 pips. So my stop loss can only be 10 pips or less. Now, if you're trading something like Euro USD with standards, then you can open up multiple positions, because let's be realistic, Euro USD doesn't really throw many pips like that. So you can have like 3, 4, 5 pip stop losses, and just, you're gonna be okay at that point. But when you're trading something like NAS 100, gold, US 30, SPX, these like higher volatile pairs, you want to have like tighter stop losses. So that's why I only tend to risk 1% or less per setup, not per entry. I even had to bold it out. Do not over leverage. I had to bold it out because like I always want to give myself that constant reminder, like we're in the phase of compounding. Like, yeah, I want to see money, yeah, I want to be able to grow my account, but at the same time, like, I don't want to blow my account. You know what I mean? That's why, like, when it comes to compounding, a lot of traders have to get out of that mindset of flipping, at least in my opinion. Because yeah, you could take $50 to 1,000, you could take 200 to 2,000 or whatever, but you're full margining. So you're either going to full margin and blow the account, or you're gonna go full margin and and get to the profit target. The problem is when people actually get to the profit target, they create that illusion in their mind. So that's why I follow proper risk management, and that's why, as you can see, like on the bottom here as well, I also have magic keys. Magic keys is something that every trader needs. I'm gonna be honest, because magic keys, it helps as far as like risk management. Like you could set it up so that it can risk 1%, 2%, 3%, or you could set it up by like a specific lot size. So me, I have it set to where it just risks 1%. Now sometimes I risk 2% only if I have like a bunch of confluences, and I know for sure, like, okay, even though I know like nothing's guaranteed when it comes to trading, I know that, okay, if I risk 2% and say it's a break and retest, it's a Fibonacci play on, say, Euro USD, say my moving averages are in confluence, say the higher time frames is heading in that direction, like say if I have all these different kind of confluences, then I'll risk a little more than 1%, but other than that, I only risk 1%. Again, like I said, the goal is to not over leverage, and the goal is to not blow your account. The risk to reward I look for on a daily is a 1-to-1 or a 1-to-2. Now in my course, I teach about the 13 EMA moving average. I would bless everybody with that one, but that one is gonna have to be on my course for that one. Now I am gonna teach about the 200 EMA and how I use it to identify the trend of the market, other than just going by strictly the market structure. So unless the trade is bouncing off the 13 EMA, and if it's presenting like a running position that I can hold, then I'll run it to a 1-to-3, 1-to-4, etc. You know what I mean? So I always kind of give myself a little reminder here. Remember, the name of the game is the name of the game of trading is risk to reward. Always make more than your losses. You know what I mean? Like every trader is going to experience a loss at one point. So at the end of the day, like that's why I always sit there and I always try to make more than what my losses are, because we got to be realistic here. We're gonna have profitable months, but we might have losing weeks, or we might have losing weeks. We might have a profitable week, but we might have losing months. You know what I mean? So we always have to make sure that our reward is more than our losses, obviously. Then I wrote myself like a little side note here of catching yourself doing the bad habits. So for example, things like revenge trading, risking more than 1%, unless unless you have more a lot of confluences. Like I just stated earlier, I only risk more than 1% when I have a lot of confluences. I don't normally try to risk more than 1% just because of the fact that again, the goal is to not blow your account, especially that I'm in the compounding phase. I'm gonna bring trade breakdowns. I'm gonna bring live trades into the channel, so stay tuned for that. Cutting winners early. One of the things that I noticed that a lot of people have trouble with is cutting a winning trade early just because they're in drawdown. That's why trading isn't for everyone. Because let's be realistic here. A lot of people can't handle seeing money fluctuate up and down, especially when you're trading like indices or like gold, where they're more volatile pairs. A lot of people can't really like handle that. So obviously the reason why we need a trading plan is because we have to have structure. So by having no structure when entering a position, that means like no confluences. Like I don't see no type of liquidity, no type of like zones where I can maybe like price can maybe bounce from. Things in that nature. Like I don't enter a trade unless I have at least like 2 to 3 confluences. But then again, like nothing in trading is guaranteed. So then here it says, don't let your emotion get the best of you. That's one thing. Let's be real here. Trading is 95% psychology. That's why again, most of these like reminders, I bolded it out for a reason. Don't let your emotions get the best of you. Don't be, say, up 10 pips, and then once you get back on MC4, it goes down 20 pips, and then you want to just close the trade because you think it's gonna hit your stop loss or whatever. Like, you know what I mean? Just let the trade play out, because let's be realistic. Most people let their stop losses get hit, but they don't let their TPs get hit. They just close it out just because their emotions are getting the best of them. You know what I mean? Like they just close it out when they're in profit. They're not letting their TPs get hit. And then next thing you know, 10, 15, an hour, 2 hours later, their TPs get hit. They're like, damn, I wish I could have held it. You know what I mean? So that's why I always say focus on your psychology. There's books you could read. There's meditation. Like one thing that I like to do right before I enter a position, or not even right before I enter a position, but right when I'm like marking up my zones, I like to play like meditation music, just because you come to the market so like level-headed. I like to meditate before I even get on my computer, just because again, you come to the market so level-headed. And then lastly, just stick to the trading plan. Most traders who are successful is because they stick to the trading plan. Other than their strategy, their psychology, and stuff like that, the risk to reward, majority of people who are successful as far as trading, they stick to their trading plan. So that's the best part about it. So then lastly, I kind of wrote down like what are my goals as a trader. So I have goals as a personal goals as a trader, but then personal goals outside of trading, which is why I also created the YouTube channel. So my personal goals as a trader are to use forex trading as a stepping stone into my entrepreneurship journey. Over here we push multiple streams of income. We don't push that we trade full time thing. Over here we preach multiple streams of income. So I want to use forex as a way to fund my other entrepreneurship endeavors. So things like real estate, buying more stocks, more crypto, having side hustles, things like that. Then I also said I want to use forex trading as a source to step out of the 9 to 5. Let's be real here. We live in such a modern day and age where I'm not saying like going to school is a scam or anything like that, but like we live in such a day and age where we really don't need school. You know what I mean? Like we can literally make money off of our phones nowadays. So I want to definitely be able to quit my job within the next 2 to 3 years. And I completely there you go. Alright, I completely spelled slave wrong. So then I said a specific goal I have as a trader is to be the best I can in my trading community. And also one day, like how I'm doing now, is to help students become more successful traders themselves. Just by giving them, my mentorship, my advice, things that helped me throughout my journey. I have a goal to achieve trading mentorship, like I just said. That's why I created my YouTube channel, my course, my website, the one-on-one Zoom sessions. And I said my goal in life is to create multiple streams of income. Like I said, I don't want to be tied down to a 9 to 5 for the rest of my life, especially a 9 to 5 that I know I'm going to hate. So then I said another couple goals I have as a trader overall is to work on my discipline, psychology, patience, and overall my spiritual being as a person. that goes outside of trading as well. Just because, you know, being patient with people, being like, you know, being more spiritual as a person, working on your psychology, your discipline, so that when you come in the market, um, you know, you can hold your trades, you can not let your emotions get the best of you. So yeah, this is basically my trading plan. I literally have it on my computer. You can have it written down on your phone, your computer. If you like live in your by yourself, or if you trade in like an office, you could write it down on like a whiteboard or something. You want to stick to that trading plan. Like I said, you have to be disciplined enough to stick to your trading plan. Don't start revenge trading. Don't start risking 5% just because you want to see some money. Because all you doing all that stuff, you're doing two things. You're building bad habits, and then two, karma, it always comes back to bite you anyways. So with that being said, I hope you guys definitely enjoyed this small little video. This is my personal trading plan. Like I said, I stick to this every single time I'm in the market. I don't trade every day, so that's also something else that I also should add in there. Yeah, I hope you guys gain some knowledge from this. With that being said, peace and love. I'm out.